Ladies and gentlemen, we're back at it again. Today we're going to be breaking down the best reward to risk ratio as well as the best win-loss percentage a trader can have. As well as at the end, we are going to talk about how social media traders are using this to their advantage to trick you. If at any point you enjoy this video, really appreciate you hit that like button. If you have any questions, you can always comment down below. So let's head over to my Word document. This is very important to understand. Now, this is one of the most commonly asked questions I get on social media is what is your win-loss percentage? What is the best reward to risk? What do you recommend? Okay, well, this is going to break it down. First off, understand every trader is different. I know traders that like to go for 10 to 1. I know traders that like to have a quick take profit at 1 to 1, some at 3 to 1. Some traders like to have, which I don't recommend this, some traders like to have risk $100 to make $50. Therefore, you're going to have a lot higher win rate because you require less from the market. Some traders like to take half of their position off at 2 to 1 and then let the other half ride. So everybody is different depending on what works best for them. Okay, and a quick way to explain this is how to help you understand this is I think psychologically it makes sense for a trader to be making more in their trades when they win rather when they lose, all right? As well as trying to have a healthy balance of a win-loss ratio. Now, 5 to 1 sound great. Yes, I love making $500 per $100 I risk. But I understand I will have a smaller win-loss ratio because I am asking more from the market. Now let's say you have a trader. This trader right here, brand new into trading, he played sports his entire life. Overall for his sports career, he won 75% of his games growing up. He was on a winning team for most of his life. So programmed into his head, he is a winner. He wins a lot of his games. So for him to go into trading and then start winning 50% of his trades or 40% of his trades is going to be very detrimental to his mindset. He probably can't handle losing 3, 4, 5 trades in a row because he's not used to losing 3, 4, 5 trades in a row. While somebody else that's maybe through his career or he doesn't mind winning and losing 50% of the time as long as he makes a lot more, doesn't mind losing 3, 4, 5 trades in a row because he understands when he wins a lot more. All right, so every trader is going to be different. Now, personally for me, I like to win more. But I also understand I have a different mindset because I've been doing this for a while. So I slowly fine-tuned my trading to fit my personal trading, and it's always changing. So you have to figure out what's right for you. So this chart right here kind of breaks it down. And if you want to be a one-to-one trader, well, you've got to be a 50% win rate to be a break-even trader. If you want to, this actually should be reversed. It should be reward to risk, but it's still reversed, but it just looks weird. Risk to reward, sure, whatever. We're risking $1 to make $2. Okay, to be a break-even trader, you have to win 33% of your trades. Okay, if you want to be a trader that wants to be a 1 to 3, as in you're risking $1 to make $3, or you could say $100 to make $300, in order to be a break-even trader, you only have to win 25% of your trades. Okay, that's pretty good. 25% of the time. But now the question is, can you handle being a trader that could only be right, 25 to, 40%, 30%. All right. That's probably what the average is between 30 and 40%. All right. I don't know any traders that are banging out 3 to 1s with a 60% win-loss record. I just don't know any. Right. So you understand it's going to be a give and pull effect. You want more in your trading, in your reward to risk. All right. You want to make more. Well, then you're going to have a smaller win-loss percentage. You understand that because you are asking more from the market. Every trader is going to be different. What's important is trying to figure out what works best. And then there's some traders that I don't really know any that like to risk more, but they're going to have a lot higher win rate. So in this example, you would be risking $3 to make $1. Now, there's a lot of give and pull effects. Like you can go into a drawdown and you don't necessarily mind going into a drawdown if you have a big reward to risk ratio. But if you are the opposite way around and you are risking $3 to make $1, if you lose 3 trades in a row, you got a mountain to climb. All right, you've got to win like 9 trades in a row just to break even. You know what I mean? Now let's get into a chart. Now, just a quick side note, understand obviously knowledge, experience will help create a better edge for yourself. This is why journaling your trades is so important, because then you can review and say, hey, what happens if I instead stop going for a 2-to-1, but I go for a 3-to-1? Yes, I understand my win-loss percentage will drop from say a 40% to a 35%. I will make more money, but can I handle maybe losing more trades in a row? Maybe over the course of 100 trades, I lost 5 losing trades in a row going for 2-to-1. Now, if I went for a 3-to-1, my drawdown during that time period would be 7 trades in a row losing. All right, it's all good in hindsight, thinking, oh yeah, I can handle it. But actually going through the gauntlet yourself is completely different. So an example of this, let's go into this quick trade review looking at crude oil. This was a 2-to-1 take profit, but originally it was a 3-to-1. Now the trader, maybe there was a trader out there that just wants to bang out 1-to-1s and they want to have a higher win-loss ratio, 60%. That's fine. That's perfect. All right. But they would have left money on the table, while the trader going for 2-to-1 would have made just as much money, in fact, double the amount of money. And in fact, prices actually went on to hit 3-to-1. And so the trader that went for 3-to-1 would make the most amount of money, while the trader that went 1-to-1 only made 1-to-1 trade. They made $100. The 2-to-1 trader made $200, and the 3-to-1 trader made $300. But you understand, over the long term, you're going to have a smaller win-loss percentage if you start going for that 3-to-1. Because let's go on to this example. This is another example. This is a trade that I was stopped out at break even. So this is where I get filled. All right, I get filled on this pullback into this demand zone. The 1-to-1 trader gets out. Why can't I draw? Okay, that's weird. But gets out at a 1-to-1. He gets his take profit. The 2-to-1 trader, I can't draw. Okay, it's right here. We go. 2-to-1 trader gets out there. He makes money. Perfect. They're all happy. But the trader that maybe asked for 3-to-1 ends up being a losing trade. So the previous trade, the 3-to-1 trader made lots of money. But then on this trade, the 3-to-1 trader loses money. All right, so you guys are starting to understand this. It's a give and pull effect. Creating a trading strategy, taking profits, understanding your reward to risk to each trader. Now, understand, social media traders will use this to their advantage, especially new traders. I'm not calling anybody out here on this picture of Word document. I just went to YouTube and I just typed in trading, win-loss record, whatever. These traders, as you can see, their thumbnails, 80 to 90% win rate, 87.5% win rate. The secret trading view best indicators for day trading, the 99% win rate, the 100% win rate. Like, how do you not click on these videos? How do you not click on them, right? But they just want you to click to see their strategy so they can, sell you a product, which is, there's nothing wrong with that. But understand, it's totally unrealistic for having these type of win rates unless you're going to have, going back up to this chart here, say a 10-to-1. You're risking $10 to make 1. All right, because you understand you are asking less from the market. All right, when we are going for 3-to-1s, you are requiring more from the market versus 1-to-1. You require less from the market, so you have a higher chance of prices going to 1-to-1 than say 3-to-1, because prices have to hit 1-to-1 before they hit 2-to-1 and 3-to-1. You get it? So you're going to have a bigger win-loss ratio. So it's all about finding that balance. Now, how these traders will play on your emotions is, you'll see these guys on social media. I just took a combination of 3 pictures and posted them. I never understood this. But as a new trader, you'll look at this stuff. Let me take a picture. And you'll be like, wow, look at this guy making all this money. But he took the exact same trade, 1, 2, 3, 4, 5 times with the same position size at the exact same price. Why do you do that? Because psychologically, it looks a lot prettier to have 5, 6, 7 trades all in take profit than having, say, over here on the right, 1 trade in profit, or maybe 2 trades in profit. Psychologically, people want to see this, right? So that is the emotions that people play to, and they execute 10, 20 different orders, and they show their phone and they're scrolling. Look at all the winners, guys. Look at all them winners. 99% win rate. And you're like, damn, this guy's making $3,000 per trade with a 99% win rate. They're playing to your emotions into this game of high win rate, but a very low reward to risk. Or they keep buying and hoping the market goes up. and that's eventually they'll blow up their account. But their whole business model is to get, once you get in, once you leave, once you've left, there's already two guys replaced you. You know what I mean? So just be careful out there, guys. A lot of people will play to the emotions and tell people, give me your money, I'll make you 100% returns. Don't fall for it, guys. Don't fall for the 90% win rate. It's people are just trying to get you out there because it looks really nice, and people like to play to that set of emotion. 99% win rate, 20 to 1 worth of risk. It ain't happening. It ain't happening, okay? So, hey, if you guys would like more training on this, I recommend heading over to moneyballtrading.com. That will be in the description below, where you can learn more about why 90% of the traders are losing money and what my top 3 tips are, and so much more of how I am trading. Once again, that will be in the description below. You can sign up there. I'd love to have you part of the team there. All right, I'm going to let you guys go. Really appreciate if you enjoyed this video, if you got a lot of value from it. Really appreciate you hit that like button. If you have any questions about reward to risk, win-loss trading in general, you can comment down below, and you can reach out to me on social media, Facebook, Twitter, Instagram, at Moneyball Austin. Thank you guys so much. I will see you in the next one. Bye-bye. Cheers.